Welcome to the Total Acre Podcast. I'm your host, C.R. Siebold. This podcast is all about helping growers unlock their potential. We aim to bring listeners agronomic insights, valuable educational interviews, real-world strategies that optimize yield and maximize ROI. This show is going to explore innovative practices, creative strategies, and breakthrough products with people that are shaping the industry, all through engaging and inspiring stories. Who better to learn from than the legendary world champion David Hula, Randy Dowdy, and Alex Harrell? Because in farming and in life, iron always sharpens iron. And the best way to grow or get better is to continually be learning, networking with peers, have access to industry leaders, and the tools, tips, and tricks, and overall quality of information. Knowledge is power. Tune in, hit play. Let's unlock your farm's potential together. Good morning. Hey, Chad Siebold here, coming to you with the Total Acre Podcast. Excited to have our newest guest, latest and greatest, Kevin McNew with Quantum Hedging. Kevin, welcome. Thanks for joining us this morning.
Hey, thanks for having me, Chad. Always a pleasure to be with Total Acre.
Folks now in the field, doing a lot of work here. Most of the corn's planted. You know, guys are starting to think, gosh, how do we raise a crop? But it's more than just raising a good crop. It's what do we do with it after we've got it in the bin, after we've got it in the combine. You know, I think a lot of times what we look at is you know, how do we get bushels, you know, grown versus how do we market those bushels? And I think what Quantum Hedging's doing is unique. For those maybe not aware of what Quantum Hedging is or what y'all are doing, maybe give us a quick rundown on Quantum Hedging.
Yeah, I mean, Chad, I grew up on a farm in Oklahoma. Loved farming, loved agriculture, markets. As a young man and seeing my family grapple with markets in the '80s was really challenging, and that kind of forced me into an academic path. And I got a PhD. I was a professor for a decade in ag economics, working at University of Maryland, Montana State. And then, in the late '90s, the internet came around. I got into crop marketing in kind of a digital fashion. And that led me to own a small business in the grain marketing space that I sold to FBN in the mid 2015, 2016 time period. And I intersected with two other entrepreneurs who also sold their business there, Cy Monley and Satish Nandaperkar, who own Sylvius Financial. And so we got to know each other at FBN, and we left FBN a couple of years ago to form Quantum Hedging. And really why we were so passionate and excited about Quantum Hedging was really kind of the notion of this AI. We saw how data and analytics were really changing, and farming and agriculture and markets have so much data. You guys are getting data all the time off your combines, off your tractors. I've always been fascinated about how you better use data for decision making. And so AI and its evolution kind of hit that sweet spot a couple of years ago. And so we were fortunate enough to kind of have our company founded with this purpose and vision of using AI to help farmers make an objective, really kind of probabilistic choice of where to market their grain. No more about stories, no more about, one thing or a few things, but really taking more of a holistic, all-encompassing approach to all the things that could potentially move markets. And that's a hard thing. It's not enough to just kind of throw data at a model and get out results. So,
Kevin, what I like about what you're talking about is taking the emotion out of trading. And if we look at some of the things that we get caught up in, it's what's everybody else doing? What is the market? What's the current condition? What I really like about what it is that you guys are doing is you have the ability to remove out, some of the emotion that goes along with total, I guess what I would call traditional marketing. And that roller coaster that we're on can sometimes be, you can win, right? We know you can win, but most of the time, those emotions probably play against us. Talk to us a little bit about that.
Yeah, it really starts with data. Data is kind of where we start, but even the data itself is something that still needs some artwork and some teasing and some playing with. It's tinkering. I've mentioned this briefly a few minutes ago, you can't just throw data in an AI model and expect to get the right results. It's not that easy. I wish it were that easy, but it's not. Markets are highly complex. They're highly chaotic in some sense, but there's underlying structure there that we're trying to find. And that's what our data and our analytics is doing. Now, so we start with data. Now, you might ask, what data goes into it? Well, things you would think of, supply and demand. All the things that come out of balance sheets and supply and demand tables that we see once a month from USDA, those are all fed in. Whether it's the US, whether it's global, whether it's cross commodity effects, so it's not just corn, it's not just beans, sometimes it's wheat, sometimes it's the underlying meal and oil. All those things are kind of playing into our data set that will be evaluated by our models. And so if we think about kind of broad categories of how we think about data, we think about supply and demand data. We think about technical indicators, which I'm a PhD in economics. I never really worked in technical indicators, but a lot of people believe in them, and I'm not going to throw anything out when I think about data. I want the model to tell me what data is good. I don't want to make that decision. So I let the model kind of sift through the data. So we have a bunch of technical indicators, and there are times like actually now, I'll talk about this later, for our listeners who want to listen later, I'll tell you what some of the technical indicators are actually showing for us that we haven't seen in a while, that are actually kind of bullish. And so things like what's going on now, where we have these big market swings, we have big pulses down and big pulses up. That's where technical indicators, I believe, are starting to kind of show up in our model to say, oh, we've seen something like this before. And when we've seen something like this before, this kind of pattern, then this is what happens. And that's really what our model's doing, is looking for kind of historical tendencies. Now, I'm sure people would ask the question, well, what if your model hasn't seen that before? Like tariffs. Tariffs are a good example. And that's really true. We're living in a world today where we just don't have any data. And that's a really valid concern of someone who uses AI. But I would also say that, there's a lot of things that also matter in this model that will kind of help you in that decision making. So, tariffs are not just the only thing that's at play right now in the markets.
And that's what I love about your technology. When you start to think about what AI is, we hear about it all the time, right? Chat GPT, all the fun stuff that's out there. But it's more than just AI. When we look at the simple algorithms that maybe come into effect in certain technologies, you're looking at hundreds of different data sets and information that go into some of the digital trading aspects of the features that are inside of the algorithm. And so when you take the technology and the features that you look at, some of these are predictable, and that's what we're trying to get, right? We're trying to get probabilities higher so that we know that we can be right more than we're wrong, and do a little bit better job using data and technology that can kind of consume all those data points and say, hey, we think if we take historic data along with our current trends, we can really start to get really accurate in predictions. And so when you talk about what Quantum's technology is really all about, start to kind of fold that together for us and start to tell us more about it.
Exactly. And that is absolutely, the Moneyball theme. I think about it as Moneyball or Vegas. They're both kind of betting. I don't want to necessarily draw that analogy, but think about if I'm a good blackjack player, the house wins 52% of the time on average, and I lose 48% of the time. But I can somehow use data and analytics to improve that odds from 48% win rate to 59% or 60% win rate. I can now really do well as a blackjack player. And that's kind of what we're trying to do in AI in commodity markets. We are not in a world where we're going to get 100% accuracy. We're not going to be right every time we make a trade or every time we make a decision. But we're trying to shift that probability from a 50-50 coin flip outcome to something that looks like 65-35, 65% chance of being right, 35% chance of being wrong. And what we're seeing is our models are giving us that. They're giving us that kind of 65, sometimes high 60, low 70% probability of success. Doesn't mean it's going to be right. It's just increasing the chance. And again, if I'm doing it disciplined and systematically over time, that win rate will work in my advantage. One hand, it might not look good, but over time it will.
So Kevin, you've talked a lot about the tech and, in terms of like some of the products and services that you guys are offering, for somebody that's maybe more of a traditional commodity broker user, and is kind of, maybe a little hesitant to jump in. How do we move away from the traditional, maybe start to dip our toe into what it is, some of the products that you're offering? So maybe give us a product to start with, and then how we can kind of get started if we're just starting to look to kind of put some of our bushels. Maybe we want a contract or two to start.
Yeah, yeah. The data features, they give us kind of a view of how those data features have done historically in alignment with the futures market, so to speak. So, imagine I'm trying to predict the next month's price change for corn. What's going to do between April 15th and May 15th. I have all that history, and I also have the history of what the various 400 features have been doing around those years of time. And so what I'm doing is basically asking the question is, which features are kind of showing me, giving me clues about what happens to corn prices in the next 30 days. And then those features, once I've kind of built those out and said these are the ones that are really working well, then those features kind of go into a recipe or a formula to kind of say, okay, what's my prediction based on these features? It's not just simply, it could be a voting model where they each vote, it could be a weighting scheme, and we're always trying and testing different things around that. But at the end of the day, the way our producers interact with our product is kind of two ways. One, we have AI built into a physical cash grain contract with Anderson's Grain called a managed bushels contract. So we're actually using AI not only to make projections about the future, but then price your grain in an HTA-like contract. So, probably many of you have heard of or used, some sort of managed bushel type contract, whether it was an expert managed or maybe there's some technical indicator managed contracts out there. This is like that, but we're actually doing it with AI. And our AI is also helping us choose the positions to take in that transaction. So it's a twofold AI process, prediction of the markets, as well as assessing what is the right trade. And that right trade might be taking a futures position. It might be doing some sort of option structure because there's uncertainty in any forecast. We're never perfectly sure, and we shouldn't be. There's a distribution of that forecast. What's the error that we project around it? Just like, in elections, we say, oh, there's a margin of error of 2% or whatever. We have the same thing. We're always thinking about not only the prediction, but also our forecast error. And that guides us in our option strategies that we overlay in those managed bushels contracts. So there's ways we built tools into the products we offer for farmers that make their life really simple. They don't have to worry about it. They just have to simply agree to kind of, price my bushels according to that. It's back to your original question. It is a flex contract, so you can deliver to anywhere. You don't even have to be in the market zone of Anderson's. Anderson's got a lot of presence in the Eastern Corn Belt, some into your area in Nebraska, but even farmers up in the Dakotas, where there's not Anderson's facilities, we still work with them. There's a fee for the HTA, but our performance doesn't get triggered, or you don't have a fee for performance unless we hit our threshold. And we offer what's called a max 10 contract, which is very new and innovative. What it does is it says we will get you within 10% of the highest closing price, the maximum closing price in your pricing window. So imagine we're going to have an offering. Our next round is going to be in mid-May, and it'll go out to the end of harvest in October. So what our managed bushels max 10 contract will be is basically getting you within 10% of the highest traded price in that entire 5-month window. That's really revolutionary, and that's part of our AI, and that's part of our ability to kind of modulate our options trades accordingly. And so, I'm really proud of the fact. Yeah, and again, the fee, normally that fee would be like 11 cents, but we're only charging you the 6 cent HTA fee, and then we only charge the performance fee of 5 cents if we get to the performance we guarantee, which is the 10% within the max. So that's something that I'm really proud of. I grew up on a farm, and I've seen this business for 30 years. I know that farmers get really frustrated when they think, an advisor is going to help them, and then they don't necessarily help them. They may actually make matters worse, and insult to injury, you get piled on with fees. So, we really want to right size this for producers, especially in the world we live in today, where things are really hard. So, no, you can rest easy to know that this is not going to be something that you're going to pay a lot of fees for, unless you're going to pay the fees only if you get up to this threshold that we said we would get to.
And that's what it's about, right? The easy button. And so I love the fact that you're saying we don't need all the bushels, right? Give us a chance. Let us go ahead and start trying to showcase our technology to show you what we can do. I think, as I look at the historic win rates over time that you've had, and again, I love the background of your business, where it started, where it's going. But when you start to look at that traditional model and taking out the emotion, using technology to really get you firmed up on being predictive, again, being more right than we are wrong, that is what we're all about. I love it. Kevin, thanks so much for coming on today. It's always great talking to you. You always have the latest and greatest. Before I let you get on with your day, I want to talk a little bit about tariffs. I know you talk often about the different anomalies that come into seasons as you start looking at historic trends, whether it's war, tariff wars, new leadership, the political side of these things too. These are the features that are hard to kind of put into an algorithm. But if you would maybe just kind of summarize where you all are at on some of the things that are going on with tariffs, some of how that's going to affect some of the commodity pricing, and what y'all's thoughts and feelings are on how that's going to be built into an algorithm, or can it be?
Yeah, well, the way they show up is kind of indirectly right now. For example, I mentioned this with exchange rates and interest rates. Exchange rates. The U.S. dollar got really weak. And that's kind of a reflection. Interest rates changed a lot. Technical indicators. Again, technical indicators in some sense are kind of like trying to pick up, or what they're picking up right now is big changes in market sentiment that are happening very quickly. And so even though the model doesn't know, there's the potential for a trade war and tariffs, it doesn't know that objectively from our data. It does know that, wow, we just saw this huge market reversal after the crop report. And, we came into the crop report feeling, reasonably bullish. And now, as we've come out of that crop report, our technical signals have started to confirm even more upside. And so this last 2 weeks since the crop report has just been reaffirming kind of that reversal. And so again, is the tariff baked into our model? No, but it's showing up. The mechanics and the kind of gyrations are showing up in ways that our model's picking up and going, hey, when we've seen this happen, this kind of steep reversal, there's things that are really quantifiable, really kind of actionable, that say, yeah, this has a high likelihood of going further. And that's what we've seen the last 2 weeks. We'll see if it continues, but that's been positive for us. So even though we were a little concerned and apprehensive about the tariffs, we're realizing the tariffs are, and what's going on as a result of the tariffs is helping our models guide us in the right direction. One thing, Chad, I just wanted to say, if they go to our website, quantum-hedging.com, you can actually get our forecast. We actually, as a kind of free trial, just free service, we give you our forecasts. They're delayed a couple days because our models are taking action, so we don't give them to you in real time. But you'll see our forecast. You'll see really clearly kind of the delineation of how our features are playing out, and that's interesting. So watch that. It's a free email. You can see how our models are doing, and like I said, the last 3 weeks they've been signaling bullish. around this kind of recovery. And so, watching for the rest of the season, try us out with our managed bushels program, all from our website, quantumhedging.com.
I love it. One thing's always certain is uncertainty, right? But utilizing technology and data to be able to actually be our friends in this type of an environment, I think is super important. So, Kevin, again, as always, it's great to have you on. It's great to hear what y'all are doing. Thanks so much for coming on. Have a great day. Appreciate you, man.
Thanks, Chad.
And that's a wrap. Thanks for tuning in today to this episode of the Total Acre Podcast. Hey, if you enjoyed it, you like the conversation, be sure to subscribe. You know the drill. Spotify, Apple, YouTube. Go give us a click, give us a like. Until next time, though, keep pushing forward. We hope that you found something unique, something powerful here that might help you unlock your farm's potential. We look forward to seeing you next week. Be safe. Talk more here soon on the next Total Acre Podcast.